Can you refinance an investment property mortgage? Have you ever wondered if refinancing an investment property mortgage is a smart move? Let's break down what this means and how it can work for you. Refinancing an investment property mortgage is quite common among real estate investors. It involves replacing your existing mortgage with a new one. This can help you take advantage of lower interest rates, reduce your monthly payments, or tap into the equity you have built up in the property. To start, you need to understand the equity requirement. Most lenders want you to have a significant amount of equity in your property before they will allow you to refinance. Generally, this means that the value of your property should be much higher than what you owe on your mortgage. Many lenders requiring at least 25% equity, but this can vary depending on the lender and your specific situation. Another important factor is the loan-to-value ratio. This ratio shows how much of the property's value is financed by the mortgage. For example, if your property is worth $100,000 and you owe $75,000, your loan-to-value ratio is 75%. Lenders usually prefer an LTV ratio of 70 to 75% for investment properties. When you decide to refinance, there are a few steps to follow. First, gather all necessary documentation. This includes proof of income, tax returns, homeowner's insurance, and statements of any debts. If your property is rented out, you will also need to provide documentation of rental income. Next, it is wise to compare rates from different lenders. Since investment properties are seen as riskier than primary residences, you might encounter higher interest rates. However, shopping around can help you find a better rate, which can save you money over the life of the loan. Once you have chosen a lender, you will submit your application. The lender will evaluate your financial situation and the value of your property before approving your refinance. Refinancing can offer several benefits. If interest rates have dropped since you obtained your original mortgage, refinancing can lower your monthly payments. You can also consider cash-out refinancing, which allows you to access some of the equity in your property. This cash can be used for other investments or to make improvements to your property. Additionally, if you have other debts with higher interest rates, cash-out refinancing can help you consolidate those debts into a single loan with a lower interest rate. From a real estate investing perspective, refinancing can be a strategic move to improve your cash flow or increase your potential for future gains. However, it is essential to weigh the costs associated with refinancing against the benefits to ensure it makes financial sense for you.